soybean markets beaten down in the Chicago Mercantile Exchange. Jerry Gidel is ready to assess that right here on Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. So, Jerry, soybeans on Friday, only on Friday, fell by 17 points, 17 cents. What's that all about?
Well, that was just kind of repercussions of some of the after a good rally overnight, it did back off. The When people started analyzing or looking at the actual numbers from week to week, even the export sales we had were cut by a third. So on things, so instead of being closer to 30 million bushels in the U.S. It only is closer to 20, and that was a little disappointing. And that stare at those data, though, it's hard to figure out exactly where where there was higher numbers on a weekly basis previously at this point. But in general, the soybean market after the USDA's numbers from last week has really been sluggish, and that continued attitudes about South American prospects along the way. There was some rains around, definitely in various areas in Brazil. I guess the real question for me is how much is the rain going to help it? It's definitely stabilized things. There's no doubt about that. But are we going to have some kind of recovery there? There seems to be a lot of people pointing towards Argentina here. There was some numbers floating around in both corn and beans here. They're talking about corn maybe getting closer to 58 to 60 or 59 million metric tons, and beans maybe 53 or more. And so those are the other factors in there. Yes, Argentina is part of the scenario in South America. I guess the real interesting part of that is how aggressive will the producers be down there. They are really kind of disappointed by what's happened here with the new political people in power. I had to talk earlier about freeing things up and a type of thing here with a libertarian style of government. But unfortunately, the realities of the hit Argentina is that they still need to have some type of place to get some revenues, and so
But
instead they actually
at
made an
least
impact on it.
this week, exactly this week, was that the Argentinian Congress stepped in and they would only approve most of the reforms if there is significant lowered export taxes for the agricultural sector.
Well, that's an interesting approach. That sounds like somebody's trying to hold the original ideas for the new government to back to where they were instead of what's happened. It's going to be interesting from that point. I don't think there's going to be a huge reduction past where they were before, but they increased meal and oil exports. They made some other adjustments in corn and wheat. So if they go back to the original ones, that would at least I think provide some positiveness for more exports if there's but right now, there's going to be a better crop, no doubt about it. Last year was a total disaster, uh, with a 35 million metric ton bean crop and, excuse me, a corn crop at 35 and a bean crop at 25. Both those, huge drops from normal. But in general, here, that's been the perplexing scenario here. Is the fact that I think traders are looking at the fact is Argentina going to make up for all the issues in Brazil? I don't think it is, but that's how we're kind of pouncing along here. We haven't got our percentage of harvest, which has been very, very poor, by the way. The initial harvest, it's like less than 5%, but it has been very poor yields, and that's what's extrapolating some of these very low estimates for Brazil. It's somewhere in between. We had numbers down to 135 million metric tons before the report last week, and We've supposedly had uh, big sponsorship uh, of a tour out there, and they came in with 152, uh, 52, 53 million metric ton crop, which is kind of where everybody was before the report was out, except for those outliers. And so it's going to be real. It's constantly important what South America and Brazil's output will be.
Well, I can tell those storms in southern Brazil that occurred last week, they were pretty significant. I have heard about areas with a record time of power outages.
Mm. Well, that's not good. Definitely, in the summertime, it's pretty warm down there, so you want to keep the potential, at least, for your fans and your air conditioning to go from there. Right now, at least, we're kind of going to go through we had a really cold snap here in the U.S., of course, last weekend, and now we're dipping down a little bit now. But the expectations is for things to kind of warm up for the last half of, or last portion, I should say, of January here, with the even the warm temperatures maybe even continuing on into February here on some of the longer term forecasts. From there, definitely would be welcome for many people in the Midwest.
Yeah, as well, we talked a lot about the supply side, but let's talk about the demand side. Because we had a lot of numbers from China. The manufacturing exports are going down in China. Population is not growing as expected. And even the price of crude oil is going down, I think, as a result of a lower economic activity in China. And even with all this situation that the war is expanding in the Middle East as feared by many. So how do you think this is going to affect the commodity markets?
It's always the big psychology of inflation is really a big portion of that is in energy prices, and food is another one that's there. Though the food side of things that gets beat down. And I think that's some of the issue that we've had here in some of these prices this week. And like you're right, the attitudes about worldwide demand slash price activity in that is slipping back a little bit, maybe led by China as to their economic activity at this point. From there, interestingly, for 10, 12 years, or longer, and that since the 2008 to 10 issues around the world, China's been kind of leading this in economic recovery. Well, it really has not. It's completely got itself back together here after the COVID incidents of a few years ago, and so that's definitely a factor that has psychologically had an impact now as to interestingly enough, during 2023, a lot of their imports from around the world have been up: corn, soybeans, even wheat. But at this point, you're exactly right. There's people are looking at their general economic activity right now, and it's instead of being this 2 to 5% kind of number, where there's a lot of talk of 1 or 2% increases for the coming year, and that has not been the style, and so the people are fearful that will end up reducing some of its demand situations going forward from there. And so it's definitely a factor that's psychologically coming to these markets. Specifically, can you point to exactly what that might or might not happen? I guess it's back to how much in the agricultural world that they will be doing on imports. Uh, their corn crop situation, they did make a big adjustment from 280 to 288 in the last week's U.S. numbers, and that's not an outrageously high number though on corn and that and the wheat side of things is still kind of messed up for the big rainstorm that happened right during their harvest out there that really knocked down their quality of wheat this year. Uh, so in turn, at this point, uh, going forward, at least it's going to be watched closely as to how the Chinese approach some of these markets. But interestingly enough, I don't think that they are going to be able to find a lot of excess supply this year, like last year in Brazil, where they found some very, very cheap products that because the transportation systems and things like that really had a major problem in late spring, early summer last year. So guess we will see how that all works out here on both the South American outputs on and how the economic prices are. I kind of feel like though we really have seen some significant breaks here, like over $1 in beans since the first of the year. And in corn, we're talking 25, 30 cents. And so we're at some another shelf of support out here. We'll just have to see how that progresses going forward here. But at this point, the markets in the short term are still searching out what kind of total crop there will be in South America.
Yes, but purchasing power will be another factor, not only the economic activity. So there are always many different opinions on this, but sounds like it will be an unstable year, and usually in unstable years, the US dollar is a safe haven versus other currencies, and especially the yuan, where there is difficulties there in China.
Oh yeah, well, you're exactly right. And at this point, the psychology of a stronger dollar is not what the agricultural markets and then traditionally don't like at this point because it points to people looking at other alternatives here for sourcing things because their values have went down. I'm at this point, I'm really think having a hard time getting a good handle on how people are going to respond to Argentina. They're going to have a lot more output this year than they had last year, but they're not excited, like you just pointed out. And there seems to be maybe an attitude that they're going to get some of these export taxes and things like that knocked back. But at the same time, the total value right now on their things. But at the same time, they're going to need some money. There's no doubt that last year's small crops, even though it was maybe higher prices, it's definitely the total volume is going to be there. That Argentina is probably going to be the most one to watch as competitiveness in the world markets come up there versus the U.S. From there, well, of course, Brazil's in there too, but I'd have to say that if there's going to be some type of uh, adjustment in world purchases and that the Argentinian farmer and that economy is going to be the one that's going to be potentially the one that's going to fill in the void if they're in these things of lost Brazilian output right now in the short term. So, yeah, right now at least there isn't a lot of specific news in these markets about production and that we are kind of floating around here trying to figure out the next stage of where some of the major buyers, like you talked about, the Chinese, are going to go in 2024.
Yeah, so we had a week of only 4 market days. So what do you expect for next week, which will be a full week?
Well, we haven't had one. Actually, I think we've had one full week out of the last four. Uh, so it has been a interesting scenario of how the markets adapt and these kind of reduced time periods going forward. I'm anticipating some stability here. I don't know how much rebound we're going to have in these prices in the short term. It's going to really depend on how what some of the reports are about Brazilians harvest at this point, what kind of yields they're going to have, also what kind of rain activity occurs in Argentina to keep boosting their crop potentials down there. U.S. wise, we're here bouncing through winter, which isn't doesn't change the demand's usually high just because it's winter, because the animal needs things like that. But we do have a little lighter conditions. I anticipate hopefully a stable market with maybe a slight recoveries here, and get some feet under this market after a pretty defensive tone for the last month.
All right, sir. We'll check back next week. Thank you very much.
Exactly. Good to talk again. And at this point, let's look forward to some of these warmer temps they're looking for the coming week. That's what we need.